Hello and welcome to the Delaware Mortgage Rate Mortgage Market Weekly Update for the week of December 17, 2012. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, what we saw last week is we saw mortgage rates continued their move higher as the bond market did sell off. If you look at the bond chart, you can see the trend has been for bonds to keep moving lower, forcing home loan rates higher. Now we are hoping they can bounce lower, this coming week. To bounce off support, but for right now, we do see the trend for rates to move slightly higher. Still at all-time historical lows, so still a great time to purchase or refinance a home. But what's been moving rates around is the talk of the fiscal cliff, which has been in Congress lately. At January 2013, if Congress fails to act, we kind of go over the so-called fiscal cliff. Mandatory cuts to programs go into effect, and the Bush-era tax cuts will no longer be, so everyone's tax rate will go up. The Congressional Budget Office is predicting that will push us into a recession. Now, if that does happen, that would be good news for mortgage bonds, and mortgage rates would probably stay low, but the stock market would tank. So if we do see a deal reached on the fiscal cliff before the end of the year, we could see that hurting mortgage bonds in the short term. They may move even higher. So we would recommend taking advantage of the low rates now, getting under contract or getting your refinance application in. We also saw last week the Federal Reserve announce the implementation of QE4, quantitative easing round 4. They are going to continue buying bonds and treasuries as long as unemployment stays above 6.5%. So they're going to keep the Fed funds rate low. So that is to help keep home loan rates low and keep borrowing costs low to help stimulate the economy. Big read we need to watch is inflation. Inflation is the enemy of bonds, so inflation does kick up. That would force home loan rates higher. So we did have the Producer Price Index released last week, and that showed inflation actually dropping 0.8%. So it was a negative 0.8% reading. So that's great news on inflation. Then we saw the consumer level inflation, Consumer Price Index, drop 0.3%. So both readings on inflation, wholesale and consumer level, so inflation is remaining tame, which is great news for mortgage bonds. In the housing-related news, what we saw is FHA extended their property flipping waiver to December 31st, 2014. Now, what that is FHA has a rule that investors are not allowed to buy properties and flip them and sell them to a person using an FHA loan without waiting at least 90 days. So they have extended that waiver so that you can flip properties with rapid appreciation above 20% in less than 90 days. Now, there are some extra requirements. You are required to have 2 full FHA appraisals. You will take the value of the lower appraisal, and you are required to get a home inspection reviewed by the underwriter. So those restrictions aren't in place if you are past 90 days. Now, if you're between 90 and 180 days, you don't need the home inspection, but you're required to get the second appraisal, and you would take the lesser of the 2 appraisals. VA announced the loan limits for Delaware for 2013. They're remaining the same. Maximum loan limit for VA is $417. Now, you can go above $417, but you're required to put 25% of the amount above $417 down as a down payment. Conventional loan limits stayed the same for all 3 counties of Delaware as they were in 2012. And then in 2013, January 1st, 2013, 2 new taxes go into effect as part of the Obama health care law. The first one is the 3.8% tax on real estate. Now, it's not actually a tax on real estate. It's a tax on capital gains. So it's not on all capital gains. It's the amount above adjusted gross income of $200,000 for an individual, $250,000 for a joint filer, and that's a 3.8% tax on the amount of the gain above that. And then the second tax is for high income earners. If your adjusted gross income for an individual above $200,000 or $250,000 for a joint filer, you will have an extra 0.9% Medicare tax you will have to pay on all income earned above that limit. So two new taxes go into effect January 1st, 2013. So if you are going to be selling a primary residence or an investment property, doesn't matter which, and your capital gains put your adjusted gross income above the limit, the amount that's above, you will have to pay that 3.8% tax. So that does affect January 1st, 2013. So it might be a reason to get your house sold before January 1st. In the local news, the next free First Delaware First-Time Homebuyer Seminar in Newark is coming up in January. There's actually one in Dover this Tuesday, December 18th. Now that's December 18th. That's from 6:30 to 8:30 p.m. at the Dover Sheraton. You can register for that by giving us a call at 302-703-0727. Or you can register online, www.delawarehomebuyerseminar.com, delawarehomebuyerseminar.com. You can see the full schedule for the first quarter for the seminars in Delaware, in Newark, and Dover at the website, delawarehomebuyerseminar.com. Now, if you'd like to apply for a mortgage to purchase a home, take advantage of these low rates, or to refinance, take advantage of one of these special programs they have, low documentation refinances, give us a call in the office, 302-703-0727, or apply online, www.purmidelaware.com. Look forward to seeing you next week.